All right, traders, ended up finishing the week very strong in the green. Yesterday, I had my second red day of 2023, and I ended up losing $2,000. With that being said, in terms of today, I ended up making over 10K on the day, and I'm going to show you exactly how I did it. I bounced back very, very strong, and the trades today were absolutely phenomenal, and as a team, we performed much better. With that being said, I'm going to show you how I ended up trading the best setups at the best prices. Then I'm going to give you an updated price action analysis on SPY towards the end of this video on my thoughts into next week. So with that being said, in terms of the first trade that I ended up making today, I ended up top ticking the SPY and buying the put options at the exact lows when it was at the exact peak when this was at 407.50. The reason why I ended up doing that is, like I tell you guys, I was expecting a gap down in the first place, and if SPY is going to gap down and I see resistance confirmations at that previous closing price, so right here, this is where SPY formed resistance, right? So what you're looking at is a 30-minute chart. You want to change your life, start studying the 30-minute chart along with the 1 and 5 minute chart when trading. But with that being said, we had a massive sell-off and a nice gap down from the previous closing price. As you can see, if you look at the chart right here, your previous support at $408 cracked into yesterday's close, which is bearish. It then gapped down and opened up lower than the previous close at 407.09, which is bearish. So when it gaps down nicely all the way down to 404 and instantly rips back up to the previous closing price at 407.09, I'm going to be interested in puts. And the reason why is previous support into yesterday's close should react as a resistance level. We already sold off nicely from the pre-market and has not been retested yet. And of course, the one and only in my favorite trading strategy that has led to massive success, the gap close reversal. SPY ended up gapping down. It filled the gap. Once the gap filled, it did react to support, but as you can see, it ended up crashing back down nicely under the previous closing price. Now, with that being said, why did I decide to buy puts at 407.50 at the peak instead of buying puts at the previous closing price, which is where I'm supposed to buy puts with my strategy? I'll tell you why. There was never a bearish reaction at the previous closing price. The SPY filled the gap and it had a breakout. As soon as it pulled back, it turned the previous closing price into a floor, into a bullish trend reversal wick, into support. It was consolidating. There was no reason for puts at the previous closing price. Now here's where things get interesting. I bought puts towards the peak. How was I able to do that? I was able to do that utilizing the 30-minute chart. The 30-minute chart has changed my life and changed my trading forever, and I'm going to show you the pattern that I used to able to top tick the SPY and buy puts where I'm technically not even supposed to be buying puts. And let me show you what that is. So why did I decide to buy puts at 407.50? The reason why is this. Look at this green candlestick right here. See the bottom of the floor and see the top of the wick kind of like in the middle. See how it's this fat green candlestick, right? Well, look at this. It formed the same candlestick on the 30-minute chart. If you compare this candlestick right here to this candlestick right here, you will see visually they are the same candlesticks. The only difference is it's on a smaller scale. It's not as big as a green candle, but they look identical. This candle formed during the FOMC, so that's why it's a lot more bigger and volatile due to the news event. This 30-minute candle, was simply not the FOMC, so it's not going to be as big. But you can see it was an overreaction. The low of this candle was at 405. The high was at 408. That's a 3-point spike in 30 minutes, and we just filled the gap. So what I'm telling you is I noticed that 30-minute candlestick, and I told myself, okay, when it forms that bullish candlestick that looks bullish on the 30-minute chart, what happens the next 30 minutes? Look right here. Next 30 minutes, it sells off massively. See how it forms a slightly lower high and it drops massively? Look at this. Same exact pattern. It forms that slight lower high and drops massively. So as soon as this 30-minute candle closed and the next one opened up, I was hitting puts into all of the bearish confirmations at that 1030 mark and slightly before that 1030 mark. That's the pattern that I utilized. Without that 30-minute pattern, I would not have bought puts at the best price possible. And that is the reason why I bought puts above the previous closing price, where people think it's bullish, but the reality is, due to the 30-minute pattern, the next 30-minute candle should open up bearish. So that's what I'm doing as well. I'm catching 30-minute patterns. Do you see how I caught that? This bullish 30-minute candle overreaction to the upside, bullish 30-minute candle to overreaction to the upside. It's the same candlestick, just on a smaller scale. What happens the next 30 minutes? A slight lower high, and once it goes below the closing price of this 30-minute candlestick, once it goes below the 30-minute price of the closing price of this candlestick with a slight lower high, it sells off and dumps. It sells off and dumps, right? Do you see that? And look what happens overall. It even went a little bit lower before rocketing off. It even went a little bit lower before rocketing off. And you better believe I took advantage of calls and not only puts. So that was the best trade of the day. And that was a very, very nice win. In terms of all the trades that I ended up making today, I made a decent amount of trades. And in terms of all the wins combined, if you were to take the percentage gains and the percentage losses, combine them all together, it was over 150% in wins and slightly above a 10K profit. That was the main trade. And that's why that's how I was able to play puts above the previous closing price. If that 30-minute pattern did not form, then I likely wouldn't have played puts. And if I did play puts, I would have waited until it went under the previous closing price and react bearish. The reason why I got a much better entry is because of the 30-minute pattern, and that's why I didn't wait, right? So use the 30-minute candles. Now, I'm going to show you more patterns. This is how I was able to time the market perfectly and buy calls multiple times. I played calls a lot of times today, and I did very, very well. Look at this. See how you have this green candlestick right here. See how you have this green candlestick right here. Then it follows up with two slanted red candles to the downside. Then it follows up with two slanted red candles to the downside. What happens after those two slanted red candles? The SPY goes up for an hour straight. The SPY goes up for an hour straight. And I took advantage of that. I was buying calls into that third candle. I was buying calls into that candle. I was buying calls into that candle, taking advantage of it. We knew it was going to break above the previous closing price, and we knew it was going to close decent. So that's another pattern that I picked up on. Again, just to show you it one more time. Very, very simple stuff. See how you have this green candle here, you have this green candle here, two slanted red candles here, two slanted red candles here. What happens after the two slanted red candles? It goes up for an hour, it goes up for an hour. And I was taking advantage of that. Now, when I was buying the calls, I was buying them on the dips. I said, okay, the pattern said we can spike for potentially an hour and it should open up very, very strong, which it did. So instead of just buying calls and holding them, what I was doing was multiple times with 0 dates, I was buying calls on dips in these 30-minute candles whenever it would dip, and then I would sell into the rip, and then I would get back in when it dropped back to the previous resistance level and reacted as a support. That's what I was doing, rinse and repeat within this hour. And that was all within the trends, right? So those are the main trades that I wanted to touch on. Those were the main patterns in terms of the 30-minute chart. Those 30-minute candles is what led to my success today. I'm telling you, if you use these 30-minute candles the right way and identify what happens when the pattern forms and capitalize off it on the next opening of the 30-minute candle and history repeats itself, you can do very, very well. So if I'm seeing a pattern where it's going to try to spike for an hour straight, what I'm going to do is I'm going to buy calls towards the lows of that pattern, towards the opening of the next 30-minute candle, whatever it says, in terms of history repeating itself. And then I'm going to sell into rips and scale back in when it hits previous resistance levels and reacts to support. That's what I'm going to do, and just continue to scale that way. Buy the dips, sell the rips into bullish 30-minute candlesticks, right? Now, with that being said, what do I think of the SPY right now? The SPY closed at $408. What I want you to understand is your previous make or break support is at $408. So heading into next week, the previous closing price must react to support and it must break above. If so, the bulls are going to take control and they're going to send it to 411. That would be the next level. Now, if 408 reacts as a resistance level, then the SPY is going to go bearish and it's going to be heading back down to the 407 to 406 to 405 range. That's where it will be overall down. So right now, in terms of where we're at in the market, we are at previous support, and it's reacting as a resistance. It's reacting as a roof. If it breaks above and reacts to support, we go to 411. If it does not react to support and reacts as a resistance level, then we go to 405, 406. That's where we are in terms of the state of the market. There will be more updates heading into Sunday with the best setups as well. I'm going to give you some stock setups as well if I can find some. Actually, Triple BY is going to be a stock setup. One of the best traders within Trader Society ended up buying Triple BY in the 240s today. We did not buy this in the 280s because there was no bullish reaction. He thinks it's due for a dead cat bounce, it's due for a spike. I held off on it because it's a bearish candlestick on the daily, but the way he buys is slightly different. He buys into bearish candlesticks daily and he'll average down a bit and get stopped out towards a key level, which will likely be around that $2 mark in terms of max pain. But yeah, I'm gonna keep a close eye on it because it's definitely due for a spike and I'm interested in it as well. But with that being said, guys, if you want to use this weekend to study and trade the best setups at the best prices, all of the information is going to be that first link down below in the description. I'm telling you, man, this program is changing lives. And if you want to be a part of it, it is going to be that first link down below in the description. As soon as you sign up, it is a one-time fee. You get lifetime instant access to the live trading sessions that we do, to the voice channel, to the real-time trade alerts. We have 4 traders who are doing very, very well, making over 5 figures every single week, and they're posting their trades in real time. Big shout out to Top G, Steven, Dimitri, and Jim C. They're crushing it every single week. With that being said, if you want to surround yourself with the right network, if you want to get 100 hours of video lesson content along with the live streams that'll show you exactly my gap trading system, how to trade the best setups at the best prices, risk management, position sizing, psychology, and of course, the trading strategies, right? I will show you how to scalp like a pro, and I will also teach you swing trading as well. I had a swing trade today on Tesla. I didn't even mention this. I took a swing trade today on Tesla puts, and I was up so much, I just got out towards the lows. I sold this at when I was at like 194.50. I got out, made a very, very nice percentage win on that. When Tesla spikes back to 207.32, I'm going to look to get back in on those puts for a gap close reversal play. Look at the daily chart on Tesla, man. This is overall bearish. You have this very bearish trend reversal wick, and you got a gap to fill above at 207. That's where it's going to try to reverse for those lower highs to turn that previous point into resistance. I'm going to show you how to trade the best setups at those prices. I'm telling you, man, if you study very, very hard and you stick in this program, you will have the ability to read price action like nobody else. You will know exactly where to get in, where to get out, how to scalp like a pro. I'm telling you, you will have that ability to read price action, to understand exactly what the stock is going to do. That is something that we can give you. We can give you that third eye. So if you do want to join the program, it's the first link down below in the description. It's a one-time fee. It is lifetime access. As time goes on, we are going to continue to raise the price. We already have a several amount of students who joined in February who've made back more than 3 to 4 times the cost of the program. With that being said, I'm going to be signing off. Make sure you guys enjoy your weekend and use some time to study as well, man. Make sure you guys are studying. I will see you within the chat from here.